Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This is all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. The key recent pattern is actually two patterns, or rather one valid pattern and an overextension of another pattern. I think it'd be easier to explain the overextension first. This is the market traveling down along the bright red neckline, which is currently 459.5 of what looked like a May to August head and shoulders top. This pattern has breached the neckline back in August and again 2 weeks ago, but with no definitive closes below it, it seems the market is using this as a route for lower prices rather than exploiting it for a break lower. This bright red lower neckline also shows up in the second valid pattern, and in this it acts as a lower trend line with a bright green upper trend line currently at 471.25, together forming a shallow July to date descending wedge pattern. This pattern is very shallow and consequently narrows at quite a slow rate, and it will not reach an apex until early next year. However, do not expect the market to wait till then, nor expect the market to make a clean break, as the chances of a false break are now quite high. So, caution. I will note two further features. The first is how the green short medium moving average, currently 472.5, is shadowing the bright green upper trend line. That's something to note. And the second is how the market is right now coiling around the interesting 50% Fibonacci line of the May 23 to January 24 move of 467.25. Winnipeg Canola. The key recent pattern is and has been fairly obvious here for quite some time. It is the bright red late June to date bear channel, which is currently 591.60 to 641 even. The most recent action has seen the market 3 weeks ago spike down to the May 2023 low at 611.10 and bounce up from there, though not by far, to just short of the bright red upper bear channel line and around the 2021 low at 629.5 and the lesser Fibonacci line at 632.90. What else is notable is that we are below the flatlining gold long moving average, currently at 662.80, and we are seeing the green short medium moving average currently at 650.90, shadowing the bright red upper bear channel line, but roughly $5 Canadian higher right now. All this may be coming to a cusp, as 2 weeks ago prices dropped down to the May 23 low at 611.10 and immediately bounce up. This low is not that significant, but what is significant is that nearby is the 50% absolute Fibonacci line at 606.90. And though this didn't have much effect on prices on the way up back in late March this year, it may now be a different story, at least for now. You see, below this, we really don't have that much support until the band 559.40 to 575, which created the low for 2025. This is also another pattern to consider, and that is looking at the whole mid-April to date action as a possible complex head and shoulders top pattern. A really ragged one as well, with a break lower back in mid-August below the neckline, which is currently at 676.70, though I have also previously considered the 38.2% Fibonacci line at 665.70 as a proxy for a possible neckline, or maybe even the 50% Fibonacci line for 2025 at 655.70. Whichever it is, we are still lower, and this laid out a primary target down in the 630.80 zone, which was reached in early September, and a secondary, harder to reach target X down in the 685.5 zone. just above the previously mentioned support band that we've got below. Bursa Malaysia crude palm oil. To start with, as I've done for many months now, I'd look to the wide congestion area that's overhead between 44.08 to 45.59. We tried as recently as last week to try and pierce it once again and failed, though we're still hanging around the lower edge of this congestion, supported in the immediate time by the rising green short medium moving average, currently 438.88, 43.88. Let's try that one again, 43.88. Now, as I said 7 weeks ago, and I quote, "This overhead resistance is not only resistance, but longer term resistance," end of quote. And what I mean by that is we have a number of resistances above this overhead band, with the notable ones being a pair of neckline extensions, one being the dark blue neckline extension, 46.22, of the September 15 to November 17 head and shoulders top, and the second being the purple neckline extension, currently 4700, of the September 15 to November 23 head and shoulders top. So out by about a year or a few years or whatever. Actually, it's close to 6. These would be where I would look to see some potential capping action on any small breach higher. They would not stop a break higher, as we have all the ammunition since May to date pressuring higher that will be released, but they might stop a break higher, though. Then we have also the failed pattern, or should I say not failed but widened and finessed pattern. It was originally the bright red May to September bull channel, currently 45.59 to 48.03. But this was broken, though the market has still not managed to fully let go of the lower broken bull channel line, and instead has chosen to widen and finesse this pattern for now into a wider bright green June to date bull channel, currently 43.57 to 48.22. Now, this is a work that's still under construction, as the top side has had no more than one single touch, and thus treat this with great care, but it does scan well as a pattern, especially with the bright red bull channel. However, there's one further feature which I would like to discuss, and this came about because I was at the end of June speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It was and is to watch out for a key level from now until the end of this year, and that key level is 35.99, so quite a way below the market, but still nevertheless important. You see, if prices push down below 35.99 before the end of this year, which even now is still possible, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge long-term pattern may bring. Please watch out for this, as it is important, and I will bring you more details should we get down below there, even though I know, as we are today, many hundreds of ringgits above it. Just please bear it in mind, as we still have a few months of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.